Hello, our presentation will be covering the financial institution Goldman Sachs and our currency trading. In the presentation, we will cover Goldman Sachs' history, structure, services, and DEI. We will follow it up with our currency trading experience and strategies. Goldman Sachs was originally established in 1869 by Marcus Goldman. This period of time experienced tight and expensive bank credit in a post-Civil War era, so Goldman offered to buy local tradesmen's promissory notes and then sell them to commercial banks. This launched the commercial paper business. Over the next few years, Goldman Sachs increased its international presence as it built relations with firms in European markets and grew its services to include foreign exchange, gold shipments, letters of credit, and arbitrage. In the 30s, Sidney Weinberg became the senior partner of the firm. His first years as senior would prove to be both defining and difficult as he navigated the turbulence of the Great Depression and the fallout of the collapse of Goldman Sachs Trading Corporation. Starting in the 50s, the firm created their new business department that allowed the company to market the services that its financial specialists offered. Its business with Ford Motor Company had a $657 million IPO in 1956 and a $350 million debenture offer for Sears Roebuck in 1958. By this time, the company had become a leader in both private and municipal finance. In the late 1960s, the company also added a real estate department that was used to establish the firm's sales and financing of major commercial real estate. The development of global capital markets called for the need of Goldman Sachs services and operations on an international scale. It opened offices in London and then a few years later in both Tokyo and Zurich. By 1976, the new partners of the firm were John L. Weinberg, Sidney's son, and John C. Whitehead. John C. Whitehead also created the philosophy for the company members called the 14 Business Principles to create a testament to the company culture and environment for both firm employees and clients so that they could stay connected to Goldman Sachs' founding principles. The 1980s and 90s were marked by the acquisition of J. Aron & Company, which expanded the firm's commodities trading with this addition. The firm grew its trading and hedging practices in foreign exchange with natural minerals and resources. In the following years, Goldman Sachs faced a period of leadership turmoil with frequent change in authority. The firm also moved towards a new model of limited liability structure in 1957. In 1998, Goldman Sachs went public as their stock opened for trading on the New York Stock Exchange. The first decade of the 2000s was volatile as capital markets struggled in the collapse of the dot-com bubble, the loss of confidence in investors among large industry scandals and conspiracies, 2008 financial crisis, and its impact afterwards. They also created important philanthropic outreaches called 10,000 Women and 10,000 Small Businesses. These programs were to empower both women and small businesses with education, mentoring, and capital to grow their businesses by providing these necessary resources. From 2014 to 2019, they first launched Marquee, which promoted trading, data security, and data management while assessing and controlling financial risk. They then launched Marcus by Goldman Sachs, which aided consumers in managing their debt. And the firm later partnered with Apple to launch the Apple Card that was prioritizing the consumer's experience and tailoring to the consumer's voice and wants. In the company's stock history, through many detours over the decades, the firm leaders have considered taking on and weighing the pros and cons to taking Goldman Sachs public. Prospect of the value of the additional capital it would yield and the service it would provide to benefit clients was the main driver of putting the company on the exchange. The current partners in 1998, John Corzine and Henry Paulson Jr., launched a historic vote that would lead the company to going public the following year. At the time, one of the largest financial services initial public offerings in U.S. history, Goldman Sachs IPO opened on May 4th, 1999, and involved 69 million shares at a stake of 15% and raised US $3.67 billion. The shares were offered at $53 and they rose 33%, closing at $70.375. Goldman Sachs is traded on the New York Stock Exchange as GS. In the eruption of the 2008 financial crisis, Goldman Sachs was able to maintain its stability by turning to local investor Warren Buffett's Berkshire Hathaway. The company invested $5 billion of preferred stock into the firm for a 10% stake of dividends. The day after the announcement of the investment, Goldman Sachs completed a public offering of 46.7 million shares of common stock at $123 per share for proceeds of $5.75 in billions, in an offering that was well received and oversubscribed. This helped Goldman Sachs to maintain their stability and success during the turbulence of the post-2008 crisis. Goldman Sachs consists of 4 primary segments, which include investment banking, global markets, asset management, and consumer and wealth management. The investment banking division caters to public and private sector clients all around the globe. The division provides financial advisory services and assists companies to raise capital so that they can grow and strengthen their businesses, meanwhile, also providing financing to corporate clients. The global markets segment of the business at Goldman Sachs serves clients who are involved in trading financial products and requires assistance in raising funds and managing financial risk. Goldman is able to assist its clients by taking the role of a market maker and providing market expertise on a global basis. This segment also involves making markets and clearing transactions on major stock options and future exchanges worldwide. The asset management division of the business gives clients investment advice and other services so that they can help the clients to preserve as well as grow their financial assets. Goldman manages client assets encompassing a broad range of investment strategies and asset classes, including equity, fixed income, and alternative investments. The wealth management segment at Goldman Sachs provides wealth advisory services to clients from all ranges of net worth in a very client-centric and individual-specific way. This segment operates globally and serves clients on all forms, such as individuals, families, family offices, foundations, and endowments.